came from different backgrounds and different industries. My personal industry was in distribution centers. So I ran a big warehouse with 100 employees, and we were working with staffing agencies. And we knew that there had to be a better way to staff our businesses and to set people up for successful careers. So we got together to build out the technology, because there was mobile apps for everything. You wanted to order pizza, you open up your mobile app. You need to find a ride somewhere, you open up your mobile app. You need to find a date, you open up your mobile app. So why not have a mobile app for work? And if we could tailor it for a social impact to creating jobs, meaning, leveraging the gig economy, introducing people for short-term, no commitment necessary opportunities, it could lead to full-time employment. And that's exactly what we've seen. It's important to note that Spot is a social enterprise. That's why we're part of the Edge Incubator Network. It's the only one out there that caters specifically to social enterprises and social impact organizations. So that's what drew us to the Incubator Network. And it's been an amazing partnership over the last year. So many doors have opened up for us, so many new friends we've made, and we're impacting lives. We're creating new opportunities. We're placing about 150 people each day into new opportunities, making those matches. And yeah, that's my background. Off to you, Asher.
Thanks, Darren. I'm not a co-founder, just so you know, but I am part of the exec team with Spot. I lead on the business development side. I come from a background, you talked about apparel. I was in the packaging branding industry for many years, where basically we took a concept right through to finished product, and we both partnered with retailers and brands. Large entities across the globe is what we supported and partnered with. A big part of our story was what we called being a preferred vendor, i.e. We gained actually approval for certain programs. I think everybody in the room may know a company like, for example, Roots. We had a very, very deep relationship with them, and were exclusive partners on many a program that you see, on various pieces like a label or a hang tag on that you'll find on products like that, through to Adidas or, underwear. It took us to very, very far afield, as far as, the Bay, for example, or Aritzia. I think we all know the types of organizations when I'm talking about that. Last July, things changed in my career, and an opportunity came about where Darren reached out to me last August and shared with me this opportunity as to what Spot was. And here we are today, and I could tell you it has been the wildest ride of my career, and I've spent time, in my career, I'm in terms of exposure to opportunities. This by far has set the bar to another level in what we're doing for people, which is most important, in what we're doing as a business. And Darren spoke about the social impact. That's such an essential part of what Spot does as a business, because there's so many facets to what Spot is delivering as a solution to enable customers, i.e. employers, access to people, who might not readily be able to gain that access. And that's part of what I do. I mean, I have a BDR alongside me, and we're creating the awareness and the partnerships to enable marginalized peoples who don't necessarily have the tools to access opportunity, i.e. breaking apart barriers and making it an unbiased process, which hopefully will lead to full-time opportunity. So that's a bit of a brief background to who I am.
Wonderful, thank you so much. And you both spoke to social impact, Spot being social impact focused, and we do have some of our students identifying their ventures as social enterprises. How do you find your experience trying to promote a social impact venture in relation to like previous experiences where a lot of people, are not even familiar with the term necessarily? They might understand corporate social responsibility or just being socially responsible generally, but how do you communicate about a social enterprise to potential customers and also to funders?
Very interesting question, because we're still trying to learn the exact formula of how to do it, because given, both Asher and myself, our backgrounds, we've been in business for a long time. We're a lot further along in our careers versus, I'm sure, many of you on the call. I can't see faces, but I'm sure we got a lot of young people that are just starting their careers. So for me, social enterprises didn't exist 3, 4, even 5 years ago. It's something new. And once I learned what it was, I learned about the impact that businesses are creating, I realized that it holds a lot of weight, in that I see this being not a trend, but the future of how businesses operate. That's how you make the connections to the community to grow a following of, loyal, call it brand ambassadors, that are excited about what you're doing. When it comes to our discussions with people about what Spot is, who we are, what we do, how we do it, usually, social enterprise is saved to the very end, because we don't like to lead off with it, just in case people are like me, where maybe they don't know too much about social enterprises. Maybe they think it's just a trend. Maybe they think it's a marketing gimmick. Because if we end off the conversation about the social enterprise, then usually that's the first question that the person will have. Oh, tell me more about a social enterprise. What is it? What do you guys do? Tell me more about the social impact. So that's our sweet spot, saving it for last. I think it's going to evolve over the next year as we come out of this post-COVID economic recovery, where a lot of new businesses have been formed over the last year, dealing with social impact issues, dealing with being a social enterprise, because that's what's been most important over the last year during COVID, having that community connection, helping people out. So social enterprise, it's here to stay. It's the future of how businesses operate. And there is a component of education that we do need to do out there to teach more people about it.
Thank you. Asher, did you want to add anything?
Like what Darren said, I mean, it is something that we save to the end in a conversation. There's no question that we do, talk to that at the end, because to Darren's point, I mean, it's not quite always clearly understood as a piece of our business, and therefore, it's carefully articulating, when is the ripe time in a conversation. But yeah, I mean, a big part of what we do tell people, and this is another key piece of of what Spot is, Spot pays their workers at the end of a week. We're basically taking on our shoulders the exposure of a payroll in order to ensure that that worker can pay for the bus, on their way home, can make their cell phone bill payment that might be due that afternoon, that can pay their rent and ultimately put food on the table. And I can tell you, it's not important to talk about what temp agencies are, because that's the space we're completely disrupting and are breaking down what they are not meant to be. And bringing that piece, it really, it widens people's eyes. That I do find in conversations.
So you mentioned kind of agencies that some would consider competitors, how you would stand out in between competitors, so I'm social aspect to your work, but then there's also, social enterprises are also meant to make money, not in addition to having a social impact. So and a lot of the students here, like I said, like some of them have had existing ventures that had started shortly before the program, but all of them were in super early stages, and I think all of them would agree that something that they struggle with often is finance related, like, pricing and how to price themselves in a way that makes them able to compete with competitors as a starting point. So how was that experience for you?
It's funny you asked that question. I'll hark back to August of last year when I joined Spot. And Darren and Daniel, our other co-founder, we were chatting and about pricing and what do we go in at, and there was a threshold. Let's really undercut the market. Let's really go full throttle and really bring about a real scare tactic to an opportunity. And I said, gentlemen, I don't think we need to be so cheap. I very clearly remember that conversation, and I could tell you that we got out the gates at 20%. We were offering to opportunities, getting out of the gate to get exposure and get opportunities on board. I can tell you today we're at 25% as fees. Okay, and come Q4, if you have not signed up in order to get onto the app, and if we even let you on to the app in Q4, it'll be 30 plus. Okay, so pricing is a very, very sensitive and very strategic conversation. Okay, because we've had many conversations. You don't want to come across as sounding cheap. Well, is cheap always the best way, to sell your business? Is it sustainable? It's you've got overheads, you've got there's costs that are sunk costs. Those costs are not going away. Rent, salaries, technology. I mean, those are all pieces that need to be properly covered. And you can come with initial tactics out of the gate in order to onboard, and that can be a conversational tool. I mean, Darren can talk about even before I got out, I joined Spot. There were a couple of clients that I don't think they were doing part of their MVB process. You could speak to far deeper. I don't think they were necessarily even charging fees initially out of the gate, just to get a relationship going and to understand what they needed to do as a business in order to get buy-in to an opportunity. So I hope that gives some clarity. But Darren, maybe I might, if there's something else I may have not answered, you might want to jump in.
Yeah, so initially, being a social enterprise, because profit wasn't our driver, we figured, okay, well, we don't need to charge a lot because we're not here to make money. It's about that social impact. And as Asher said, we figured let's undercut the market. Sorry about the crying baby in the background. If we undercut the market, because we don't really care about profit, this will help us generate the jobs. And what we realized was, we can charge a little bit more. We don't have to undercut everybody, but with the profit that we're able to generate, we reinvest it back into the business, back into the communities, and the social impact becomes magnified as a result. So with that being said, don't undersell yourselves. Don't go in to be the cheapest. It's about the messaging, and if you make it clear about what your social impact of your social enterprise is, companies will buy into it. People will buy into it, and they'll say, okay, you might not be the cheapest, or you might be more expensive than this person, but I can take comfort in knowing that buying from you or using your services will lead to X, Y, and Z within my community, and they'll be prepared to do it. And that's the trend that we're seeing now. It took about 6 months before really started catching on, before we found our groove of, hey, this is what's important to our customers, and if we convey the message across, we can charge a little bit more. We don't have to be the cheapest on the block, and we still are probably the cheapest on the block, just charging a little bit more than what we were a year ago.
So you were mentioning earlier about leaving the social impact piece kind of towards the end of the conversation to in a way grab people's attention and get them to ask you more. Do you use the same tactic when you're talking to investors? How do you approach potential investors, or if there's like a funding opportunity that you're applying to? What have you kind of tried to highlight different things to different people depending on what would catch their attention more?
It's definitely a delicate conversation, because there's a certain group of investors, they don't really care about the social impact piece. And to lead off with that will scare them off immediately. Even to finish off on it scares them off, because they think, I'm investing in you because I want a 2x return, 10x return, whatever it is. And if your main driver is social impact, I'm not going to see those returns. So they close the door. What we're finding now, and we've watched it over the last year because we've been having those conversations with investors, your traditional VC that you'd go to for your beyond your initial funding. You're in your bootstrapping round, so you go to your friends and family, and then once you need a seed round, you go to some bigger investors. Over the last year, they've made so much money during this pandemic. They've had a lot of good bets that have paid off with medium-sized companies that now they're not really looking at smaller startups, and that funding is not readily available for startups because it's a conversation that you're not going to have with those VCs because they want to see sales that are 10 times higher than what you're providing right now. And if you don't have a lot of history, you really have to tell a good story moving forward and how that social impact is going to build your company that they can still see those returns. There's a new group of investor that's emerging coming out of this pandemic, high net worth individuals, new what they call angel investors that maybe aren't associated with an angel network, like the York Angels, the Georgian Angel Networks. There's a few others within Ontario, but individual investors and family offices that are now just sitting with additional capital that they need to deploy. Money is very cheap, and somebody who's sitting on a little bit of money, they need to see some returns, and they're not going to get it out of bonds, or the stock market might be, very high risk at this point with what's happened over the last year. So maybe a new startup isn't as risky as what it was a year ago, and they're prepared to have a conversation with you. And that's the conversations we're having now. So it's, a lot more meetings because, you go to one VC and maybe that's enough capital to expand your business and give you runway for the next 18 months. Now speak to 20 high net worth individuals, group them all together, and that will provide the capital that you need for the 18-month runway. And to be frankly honest, these high net worth individuals are a lot easier to work with because their expectations are lower than some of these VC firms. And the new investor, will care about the social impact. They will get excited about the messaging that you have and what you're trying to do with your social enterprise. So it'll be an easier sell to smaller investors rather than the big VC fund.
And when would you say, to your point about investors wanting to invest in a certain size startup, when would you say is a good time for early stage startup to start even approaching those investors? Or what kind of achievements do they need to have in place to start talking to people?
You need to have a good plan moving forward and forecast. And a good exercise is to kind of prepare those forecasts now and share it amongst people. Say, here, these are some of the numbers that we're going to be doing. Watch our journey, watch our story. Because when you go back to that investor 2 months, 6 months, 9 months later, and you say, we hit all of our forecasts, all of the budgets that we put forward, here's our next lot of forecasts and budgets. If you want to invest today, you can jump in today rather than in 9 months' time when I come back with my new set of forecasts. And to invest in my company, it's going to be 2 or 3 times the cost to get your same equity. So it doesn't matter what you've done in the past; those are all great accolades and milestones. But it matters what you're going to do in the future, and you need to be part of that mindset that you're going to underpromise and overdeliver. Because if it's the opposite, you overpromise, you say, hey, I'm going to go from doing $100 to $10,000 a day. And in 6 months' time, you're only at $200 per day. No investor is going to take you seriously because you're promising the world. But if you're realistic about your expectations and you're able to deliver on those forecasts, investors will be lining up for you.
So I have a few questions myself, but I wanted to see if there are students who wanted to jump in and ask any questions. A lot of this is very new, so I'm trying to think of the questions that they might have soon and ask.
Let's just put CJ on the spot. He's the only one that jumped on with the camera.
I'll ask a question. Actually, if we want to, I mean, if CJ wants to go first, be my guest, CJ. But so my apologies, I'll be kind of in and out. I'm actually currently at work, so I've been trying to juggle this as best I can. So my question, because we're talking about venture capital and acquiring funding, and we mentioned forecasts. Now, forecasts, from my understanding, is just, it's your best guess, right? As to how because I mean, for a new startup such as myself and most everyone else in this program, we have no track record. Most of us have no experience in business. I mean, I certainly don't. So how does one even make a really solidified forecast past just market research that, you know, may also have very little grounds? Let's say if you're approaching a new industry or a new or a dead industry even. In my case, the industry I'm joining in has been dead for about 4 years. And my product is an attempt to try to re-enter it. So I'm curious to know, like, how do you make a reliable forecast?
It is a bit of a science, Eric, and it's a great question because when we first, came up with the idea and concept of Spot, going back, 2.5 years ago, before we even incorporated, we saw the size of the market of, the temp staffing world, and that it was a $7 billion industry in Canada alone, just in fees. And we're thinking, okay, the first year, we'll come out of the gate, we'll do a couple hundred jobs, do some fulfillment. Year 2, we'll definitely ramp up. By year 3, we'll capture 1% of this market share. And, 1%, that's nothing. And on a $7 billion market, that's $70 million that we'll be making, and everything will be great. So let's aim to do that 1% by year 3. And we started meeting with investors, and they're like, yeah, that's very ambitious. 1%, it might not seem like a lot, but that's a huge pie. And, to do $70 million in fees, you will be needing to be doing $500 million in payroll. How are you going to be able to fund that? How are you going to be able to get there? And we realized quickly, yeah, 1% is a lot. Maybe we'll only get there in year 4, so let's not promise it in year 3. But really, year 1, if you're not live yet and you're about to go live, it's anybody's guess. And you're not going to make reliable forecasts, but what you want to do is just set the bar low enough that you can beat those forecasts. They're not going to be impressive numbers because it is your first year of business, but if you can hit all of your forecasts that you put together, maybe it's 1 customer in your first month, 2 customers in your second month. You're not going to double to 4 in your third month. Just make it 3 customers, because then you're starting to get some traction. And the most important thing, gaining the confidence. And, I'll let Asher speak to confidence, because that was the game changer for Spot. That once we got a couple customers on and we started using them as leverage, so to say, because we were getting some amazing testimonials that our platform was the future of how they were going to be hiring. They weren't even going to go to job boards anymore. They were just going to create gigs on our platform and find some great people. And then we found our stride. And what I will say is this year, since January, we've been growing 45% month over month. We've been destroying our targets and our forecasts. And now we're getting to the point where we have to reevaluate, next year's forecasts. What are they going to be? Because if we're hitting our year 2 forecasts come, next month, then, we really have to ramp them up, because it doesn't mean anything anymore. So Asher, talk about the confidence that we built.
Yeah, no, for sure, Darren. Thank you. I'm going to tell everybody there's one challenge, and I'd never sold in tech, just so everybody knew. I didn't have that exposure. It was a new part and a new wheelhouse for me, in the opportunity that was presented. And Darren says about confidence, AKA social proofing, because social proofing is key, everybody. You need those people to stand behind your brand. You need those people to be your advocates, because once they're your advocates, it's the enablement to bring that to a conversation. Coming out of the gates and saying, we're Spot, offering you this platform, and then coming out of the gates and saying we're Spot and we're supporting Stalco, Canada Cartage, TVH, the list goes on and on. So if you, I mean, the list is I could list them off, and I don't want to bore everybody. That immediately triggers a message. That immediately validates that you have a business, because the minute you have those name or that opportunity to bring it to the table, it further solidifies what you are as the business in order to capture their attention. Because remember, you may be solving their problem, and you might have the sweet spots, you know, business that's going to do it. You have to be able to share that validation out of the gates with nobody behind you, and then get to the point where you can have someone who is becoming what we, AKA your brand ambassador. Because I can tell you, bringing that into our deck, bringing that into our conversation. I mean, Darren could talk to this. You know, we recently approached Samuel and Son, a massive entity, and just to get to an onboarding, they loved the initial conversation, was phenomenal, and loved what we're doing, and we were able to share what the technology can do for their business. But they needed validation. They needed testimonials, and to be able to throw not two, but as many, 3, 4 that they needed in order to get to that meeting, and to read what companies say about Spot. Half our job is then done, because what we're doing is, it's one thing for us as a business to talk to the validation of our solution. It's another conversation when your customers, your partners are saying, there's no other way to access the solution, because that, it basically means, I don't know, I'm jokes aside, I mean, I could be out of a job. No, but I mean, in all seriousness, everybody, the key is having those people stand behind you as your banners and of support, aside from the incredible technology or business that you've developed.
Wonderful, thank you. Again, I'm holding my questions to see if there are other questions. CJ is like, he's looking away.
They answered everything I was going to ask. So, I mean, like, it's been great to listen to. I've been taking notes. I can't really think of a question when all the answers are already, like, most of the answers I'm trying to process,
Eric, your voice is very, very low. I can hear you saying something, but I can't hear what the something is.
It's probably going to be like that for a minute. Hello?
Yes.
Yeah, I don't know if it's gonna get any better, so I'm just gonna leave it for now.
You can always just type it into the chat.
Yeah.
The question that comes to mind.
I just need to run. Everybody, thank you so much. You're here with Asher. Please feel free to reach out. I'm on the Sheridan Network Slack channel. Add me on LinkedIn. Good luck with all of your journeys. If there's ever any questions or anything that we can do to help at Spot, please reach out. Any introductions, anybody that we might know that you need to know, but really appreciate everything. CJ, thanks for turning your camera on. Everybody else, have a great day.
Thank you so much, Darren. Thanks for joining.
Now I'm on my own, so I can tell all the lies I want. No, just kidding.
I think that the main thing, again, for thinking from the perspective of the students, is where to start with this whole like funding and investing side of things. For a lot of them, like I said, they're still in the super early stages. They're finalizing MVPs at this point. They've done market research. Some of them already have some customers. They've made maybe some sales here and there. And to your point earlier, that you want to have the people to back you up, or kind of the brands or the logos to throw on the website that speak to what you're doing. But aside from that, how can one prepare to kind of research what investors are out there, what events to go to kind of get that exposure? Where does the research start?
Interesting enough, you asked that question, Vesma, and I will say one thing. We are bootstrapped. Okay, I want everybody to hear that word, bootstrapped. Why? Because until you have, now, there are certain instances and there are anomalies where you can get money out of the gate. It's just, you've got something and people hear it and they're like, where do I sign? It's just certain. I think today there's probably few and far between to where to go. Look at technology where it was in 95, 2000, we had the dot bomb, and now today there's a number of solutions out there and they're being iterated. That being said, we as a spot are bootstrapped. I will, full transparency in how we, how we are where we are today. We've reached a point now that we have no choice but to raise, because of the size that we are beyond spread thin. We're working on average, most of us, anywhere from 12 to 16-hour days. Yes, 12 to 16-hour days. It's blood, sweat, and tears. It sounds sexy getting this idea out of the ground. I think everybody needs to hear the cold, hard truth. It takes a lot of commitment. You're going to hear a lot of no's, and I can tell you, through, for example, through Edge. I mean, we were on a call with. Remind me, Bess. I think it's Darm, who sits in what do you call it, in San Francisco. He is a Sheridan grad. Okay, and we were on a call with him earlier this year. We were introduced. We were invited to a conversation. Two of the ventures, being as far as we were down the road, they thought it was a very, very opportunistic conversation, and he welcomed us to the table, to help guide. So it's one thing if you have a network and you can tap that network in order to have those conversations. I think you need to have a little bit of runway, a little bit of a talking points to where your business is in order to engage in a conversation about raising money. Because I can tell you guys out of the gates, raising money was not a focus when I became a part of Spot last August. It was not. Raising money became a very hot topic end of Q1. We're now, as we all know, in Q3. It is front and center of everything we're focused on, because we're at the point where where the business is needing that next injection in order to continue at the pace that we're at. Because we can proudly say, everybody, I mean, you can go and I could talk to this, but we're not just talking to little mom and pop organizations, I mean, and not partners with little mom and pop organizations. We're talking about global enterprises that we are supporting today, multi-billion-dollar enterprises, okay? And that's come about because of what we've done as a business. We've remained focused and steadfast on what we're looking to do, maintaining our story, not, there's been the ask, when are we going into the US? When are we going to the US? Why we're not in the US? It happens time and time again. The money sits in the US. I can tell you, Canadian investors are far more conservative, everybody. And you will get US money a lot easier than you will get Canadian money. Canadian money will come with certain attachments that could pop, not that the US won't, but it generally, the reputation that we've been the sessions we've had have shared with us that money out of the US is far easier to come by. It's less, they feel the risk, they're far less risk adverse. Canadians are far more risk adverse as a general theme when it comes to raising and getting money. But personally, in my position, if you can bootstrap for as long as you can, do it. And it's don't just sell yourself because you've got someone who wants to invest in you. You've done the work. You've built the business to where it is. It's your idea. It's one thing to partner. It's another thing to have the right partner or partners.
Agreed. You reminded me of someone I used to work with who was an entrepreneur himself, and for a bit he's like anti-investors, anti all of that side of things, because he's like, I don't feel confident in where I am yet. I'm trying to. He's like, if I can do it on my own through savings and through supports for family and friends, then I'd like to avoid it. But would you say, I feel like, unless the person is super wealthy and has never ending resources, if someone wants to grow to a certain level, is there an escape from trying to secure investors? Like, is there a model where you would say, you know what, you can, if you've got the means, then.
So to that point, Bess, we were on the phone call just yesterday with an investor who just finished a massive round. You might have even seen it on LinkedIn, or you may have heard of it, called Eliacare. Okay, they just finished a Series C, if I'm not mistaken, 225 mil raise. Okay, and we know one of the founders very, very personally, and he's a very, very, very keen individual who's ready to sign the minute we say, here's our term sheet. And we are very much going to be focused in this raise on a big friends and family piece. And we're going to highlight, everybody, and I want everybody hear this. There's big risk, but there's massive reward. They know, and we can proudly talk to, being 2.5 years down the road, what we've done, taking no salaries, living literally on whatever we can to scrape by in order to get to the business where we were. We could have gone and raised back early, at the beginning of Q1, and we would have found money, because there are people who will give you money. But we could be sitting here today trying to hold on to onto the business because we're being pushed out. So it's a very, very, very important, and I've heard that many a time. I've spoken to a colleague and an advisor outside, and people who do invest. They said the last thing you want to do is go and get money and your business is lost because of the people you've gotten into bed with.
Well, what about, I want to touch on grants and governmental funding. I don't know if that's.
Sorry, say again.
I want to touch on also grants and governmental funding, like we've spoken about.
Yes.
Angel investors.
Yes. We've done a lot of grants, as you probably remember, Bess. We've talked about a lot. Yes.
So where from your experience, kind of how to find those grants and funding, kind of what things to know, and tips and tricks as one approaches that. You would probably say that, or I would imagine that it's probably easier to get to those and use those as part of the proof of, I exist and I'm doing well before you speak to investors.
So funny you say that. And I wish Darren was still on the damn call, because he could answer it way better than I ever could. So guys, I don't want to stumble here. What I can tell you, there are unbelievable grants. There's the SHRED program as well, which is another government incentive program, which basically helps, when you've got developers that you're paying. That's another thing that you can leverage in order to further get subsidy level in terms of the talent that you onboard, that the government helps enable you to keep. Because what we can proudly say is everybody that we have on our at Spot are all Canadian. We are homegrown. I mean, I can tell you there's many a startup out there that is outsourcing a big part of the development into India, outside of Canada. And being able to talk that we're fully Canadian is a huge talking piece. There must be a reason why Toronto is a super sexy place to be a startup. You know, it's getting a lot of attention. You know, there's a lot of attention why Silicon Valley is not what it used to be. It's losing its, you know, its sexiness, as we could say. But with regards to grants, they are numerous. I know I can proudly talk to. We're at the end. I mean, we're one of two. Just to give you an example, I think it's the OTF fund, and I don't want to misrepresent, but Darren would be the perfect person to go to. I mean, we can, as best we know, she could gladly share. I could, you know, share his details. You may or may not have that, but he could definitely answer any grants that he is aware of, because there are numerous. But that being said, if I'm not mistaken, there were 27,000 applicants. We're one of two at the finals. Now it's a $1.7 million grant that we're a part of. And that is separate from everything else that we're doing. And yes, we're so close to waiting for that official yes, and it's going to be a very celebratory day should it happen. But to have gotten to the stage in itself is an accomplishment, because it's not an easy process. Grant writing is not an easy thing, but done properly, as Darren would tell you, you are able to access government money, which is a lot better than having to go and give up a piece of your business in order to keep you afloat. So yes, there are numerous. And best, please, I don't want to, you know, sound ignorant, but I want to be totally transparent. You know, that's not what what I've not put. You know, my eyeballs are not on that. It's not a true piece of my wheelhouse. I know, because I'm in conversations on that, but I do know. I mean, you know, speaking, for example, with Lisa, you know, if she were on the call today, you know, she you know, Darren and I, you know, constantly noodle with her about grants. I mean, we want to go to this trade show in Austin, if I'm not mistaken. And then we unfortunately we missed the deadline for 2021 applications in order to get the grant from the government, so that we were able to access monies in order to subsidize the opportunity to be present at this particular conference, which would be very, very, very valuable to our business.
And I think in the case of governmental grants, I think the social impact there is more of a benefit than when talking to investors. I would imagine, again, depending on the focus of the grant. But it's from my experience with grants and writing, you know, filling up those applications, a lot of it is around storytelling and talking about how many people you've been able to support. So you know, in the case of employment, like how many people were able to not even necessarily secure employment, but at least advance their chances of securing employment. So I think in those cases, I would imagine again that from your end, you would really highlight the impact entrepreneurship side of Spots, and you know, who you're trying to support and in what way and why that's important. So a lot of story, I think there.
Absolutely. I mean, that's part of the reason why we were invited to Collision. I mean, that's a big part. I mean, because we had the ministry behind us in terms of what we were doing as an entity, as an organization, from the social impact people, enabling marginalized persons to access work opportunities that they may not readily have available to them, because, you know, they're newcomers to the country. You know, there could be language. They may not have. They don't have the tools in order to know how to go about accessing the opportunities. Their skills may be there, but, you know, the break is that, or the fact that comes about is you know, how do I navigate this? I'm not quite sure, and that's what we're helping to that barrier to entry. We're most definitely is a big part of our messaging to what you're saying about the social impact. I mean, we can proudly say, I mean, having supported north of 5,000, gig opportunities, leading to north of almost 50 full-time opportunities. Those are impressive numbers when you talk to government officials at both provincial and at federal. We've got the federal ministers on eyeballs on us, and we've got provincial. So that's a big part. I see that Zachary's got a question there, Vespa. Sorry, Zachary, great question. Yes, absolutely. Listen, crowdfunding is a great one. I can tell you that is not a part of our focus. We are not a crowdfunded business in order to access monies outside of possible grants that we're about to win, and how we're going about raising money for Spot to continue the trajectory that it's on. And CJ, by all means, any question?
Sure.
Never, please. Always happy to answer.
Yeah, so my company that I'm working on with Maya, she's having technical problems right now, so she can't talk, but I'll just speak. We're working on a trading card game, and the card game industry in general is very difficult to get into because it's controlled right now by an oligopoly between Konami, Wizards of the Coast, and the Pokemon Company. And if anyone knows anything about like multimedia, that's the biggest media conglomerate on the planet. So there's billions of dollars behind that. So like, do you think that leveraging social impacts through like a for-profit and entertainment business would be a good idea to get like the initial funding to make a quality product? Because there's no way a college student will be able to have the financial capital to like even compete in the same like ring or even like planet as the people in Pokemon, as people in Magic the Gathering and things like that, just because it's not really something we can do. So what we've been trying to do is make sure that like our product is consumer friendly, and make sure that the consumers are working within the are like shaping the game that they want to see, rather than just making a game and then using it as a game that like Wizards of the Coast have made just like by shipping out stuff. So do you think that like leveraging social things would even be a reasonable thing to do, or should we just go down a more for-profit like predatory marketing tactic type thing? It's a difficult question. If it's not really in your wheelhouse, don't even worry about it. That's just one of the things I've been having to deal with.
CJ, I can tell you, and full open cards, we are a for-profit business, but our social impact story comes about because of what we are as a business and who we're tapping. Just to give you exposure and understanding, in the temp agency space, it's awful. You will hear horror stories. So to what you're trying to do, CJ, if you can pull at people's heartstrings and they see what you're doing as a business will further the everyday individual society, then ultimately the social impact piece is very valid. It's a very, it's a great piece to encompass or embody what you are as a business. But if you're going to use that as a smoke and mirror, and there's no actual substance or validation to what you're claiming, then you have to be careful, because your actual business that you're looking to create could be misrepresentative, and people can see through that very quickly. And I think it's clearly has to be able to be shared versus people saying, well, is there an ulterior motive here? I mean, we can proudly say what we're doing. It's not like we know we have to make money to survive. People have asked us, are we going to become a B stamp business? If I'm not, I think that's it's another certification you can have, in terms of, being a very limited for-profit organization. I can tell you, we are looking to scale. But we know that as our story, as what we're doing, and what we're able to do for Canadians right now, and ultimately Americans, you know, in time, is a social impact story. So it's not like it's not like we're misguiding or not being transparent in our messaging. We are enabling an opportunity for people who don't necessarily have the access points. Fact. We are paying people for a job of work prior to them, prior to us actually receiving the monies owed to our organization. Again, creating what do you call it? What's the word I'm looking for? A living wage, a living opportunity. So those are all natural spin-offs of our business, and we can talk to it very, very proudly. So I mean that's a big part of how the whole Edge thing came about. What we were doing as a business, we've been transparent from day one. We can talk to our social impact piece of what we're doing for Canadians, and we can also talk to what we're doing as a business.
Wonderful. Thank you so much.
Awesome. That helps so much. Sorry, I didn't mean to.
No, go ahead.
No,
go ahead, CJ.
that I was just gonna say thanks. That was really insightful. I appreciate that answer. I was taking notes the entire time.
CJ, please know, you seem there's a lot. You seem to have a lot of questions. You may. I want you to know we're here, and Bestman knows that. I mean, part of our commitment to, as committed as Edge has been to us, which they are beyond, guys. I can tell you, you're part of an incredible program. Just everybody knows here. Really, there are fantastic lead, advisors and educators within within the Edge program. I'm telling you guys, tap into them. Tap into them. They're really, really well, they're a wealth of knowledge, and they're valuable. And again, we're a venture. We've got exposed, we've got experience under our belt. I know that Edge has used us a few times. I can proudly say, I think Besma, can attest to that. There are a number of different, people within Edge that have tapped us, to try and help them in what we are as a venture, because we are quite a ways down the path. And we can, if there's something that hasn't been answered here, everybody in the room, I know there's a lot of silence. Please know, we're always here to try and help in noodling through challenges that I'm sure you might not want to ask, among peers, but we're here, we are available should the need arise.
Thank you. Thanks, Asher. I'm keeping an eye on the clock, so I want to start wrapping up in like 5-10 minutes. And to your point about the silence, I don't think it's because of lack of interest. I think it's okay. Is just digesting the information.
Oh, no, of course, I get it. It's a lot to, guys. It's overwhelming. It is overwhelming. It's overwhelming. I will tell you.
It's new for all of them.
You know what? It can be daunting, and it feels like, do I have what it takes? Do I have what it takes? I mean, and believe in yourself. You know what? It's gonna be sleepless nights, everybody. It is. It's in that anxiety, those emotions. They're real. These are nothing. You can read about it. You hear about it. It's real. It's there. Those 11 o'clock calls. Of urgency. What I can tell you guys, in whatever you're doing, and if you are a business to business, or you are a business, a business to B2C business, whatever it is, in getting out of the gates, and when your MVP is out and you're starting to create and generate revenue, be able to support who you are supporting. The last thing you want is the blemishes to come to the surface as you're getting out of the gates. And I taught that to our team. I can proudly say the team knows I don't take that lightly. I don't take that lightly.
I'm just going to open it up for any final questions before we start to wrap up. There's Eric.
Oh, there's Eric. There's Eric. He's on a walk.
Just popping in for a second. I told you I was on shift. Just wanted to say thanks a lot for the wonderful insights. It's been very interesting listening to the different ways to acquire funding, and obviously everything else associated with the group group mentorship today. Just wanted to thank the speaker, and also say hi from Killarney. I'm in the middle of the campground right now.
Oh, that's awesome. That's wicked. Well, enjoy. I'm jealous. Be safe.
Okay, so Asher, again, thank you so much for your time, for all the information that you shared, for all the advice that you shared. I think it's and we've recorded the session for the students to also review after and kind of reflect more on what you and Darren shared. Like I said, they're still in like month 2 of this entrepreneurial journey, at least in the more formal sense. So I think a lot of the information that the two of you shared will be something that they reflect on for some time to come. But again, thank you both for joining us and giving us from your time.
Besma, thank you for helping set this up, and really, and thank you for, for allowing us and using us as an example, to showcase, what a venture, where we are with our venture. And again, I commend everybody in the room that, you're taking on this road and this journey, because it's a journey. And I hate to, to sound negative or to sound, heed a lot of caution. But I want everybody to know that these are natural, and common thoughts and experiences. There's a reason why you hear, legendary, startups that are uber successful, no pun intended. They had the sleepless nights getting out of the gates. They had the same questions that you have, that we had. It's nothing unusual. And no question's a bad question, everybody. No question's a bad question. And again, you've got great mentors, you've got great educators. Utilize those tools, because they really are going to help you in getting you set up ultimately to get out of those gates.
Wonderful. Thank you so much, Asher. I want to give you some breathing time before your next meeting. But thanks again for joining us, and hope you have a wonderful weekend.
Have a beautiful weekend, everybody. Stay safe. And again, I think, Besma, you can share our contact details if you wish. And again,
yeah, if you're comfortable with that,
absolutely. It'll be our pleasure. It'll be our pleasure, Besma. You know what?
Thank
absolutely.
you.
And I see Toma's giving us a wave there too. Hey, Toma. I don't think, have we met? Yeah, I think we've met before, haven't we?
Maybe, I'm not so sure.
Maybe in the beginning. Maybe in the beginning. Yeah. Yes. Have a beautiful weekend, guys. Best of luck. And go get them, everybody.
Thank you so much. Take care. Okay.
I'll stop recording.